NIO will break all records sooner than expected. Are you looking for NIO stock news? What's the most recent news from the stock market? Have you heard anything favorable or negative regarding the stocks in which you're interested? Are you looking for NIO stock news? Well, good day, everyone. Welcome back to Stock Market News, where today we are back with an amazing topic. Today we're going to discuss how NIO will break all records sooner than expected. Are you guys excited? Without any further delay, let's dive into the video. And make sure you please hit that bell icon too, and subscribe to our channel so you get every single update from our channel. There is a growing demand for electric vehicles, which NIO hopes to capitalize on. The EV company has introduced a new electric SUV that might compete with Tesla's Model Y, but the market's getting more crowded. Is it a good time to invest in shares of NIO? NIO, founded in 2014, has been termed the Tesla of China due to its rapid growth and successful product offerings. NIO, like Tesla, produces high-end electric vehicles. NIO, unlike Tesla, collaborates with a government-owned automaker to produce electric vehicles. Startup competitors to Tesla in China, the world's fastest-growing EV market, include NIO, XPeng, and Li Auto. The domestic EV and battery juggernaut BYD is another formidable rival, as is the German automaker Volkswagen. Volkswagen's worldwide electric vehicle sales increased by 27% in the first half of 2022. More than a third of the company's total 63,500 all-electric car sales occurred in China, the company reported on July 15th. Volkswagen outsold NIO, which delivered 50,827 electric vehicles in the first half of 2018 in China. Despite difficulties with chips and COVID, sales increased for both firms. Once considered a slacker in electrification, the German car giant is now a rising EV maker, albeit behind Tesla and BYD. The new ID.4 electric SUV has been a huge success in China, and Volkswagen hopes to capitalize on that by doubling sales of electric vehicles in the country this year. NIO released the ES7, an ultra-advanced electric vehicle, on June 15th. It can accelerate from 0 to 60 miles per hour in under 4 seconds. The ES7, according to NIO, is their fastest SUV ever, and industry analysts anticipate it will go head-to-head with the Tesla Model Y and similar electric SUVs. Reports indicate that NIO's management announced plans to release a mass-market EV in 2024 during the company's earnings call on June 9th, potentially expanding its rise as the long-rumored budget-friendly NIO sub-brand. The Chinese EV manufacturer also said that it plans to begin producing its own battery packs in 2024. Now let's take a technical look at the NIO stock market. After a 25% surge in June, NIO stock on the New York Stock Exchange has retreated slightly this month. When a short seller accused the company of reporting inflated income from battery sales, management at first disregarded his claims. The corporation later said on July 11th that it would establish an external committee to look into the claims. This decline has brought NIO stock back to its 10-week moving average. After plunging for much of this year on U.S. delisting fears and China's COVID lockdowns, the once-hot EV stock is still trading at a significant discount to both its 200-day moving average and 52-week high. NIO stock's relative strength line lags behind the market even during a period of extreme market volatility. For the majority of 2020, it rose substantially. A stock that is outperforming the S&P 500 as measured by a rising RS line. As seen in the accompanying graph, it appears as a blue line. Stocks are given a dismal IBD composite rating of 25 out of 99. To arrive at a final score, the ranking takes into account both basic and technical factors. Moreover, a 31 RS rating indicates that NIO stock has only outperformed 31% of all equities in IBD's database during the past year. For the past 13 weeks, institutional investors have been buying up NIO, as seen by the stock's A accumulation distribution rating. There were 878 funds that held shares as of June. According to the IBD Stock Checkup, the number of quarters in which fund ownership of NIO stock increased was 0. NIO is underperforming on a number of crucial financial and basic indicators. As a young, rapidly expanding business, it's still searching for ways to increase its bottom line. According to EPS, NIO stock is only average. Earnings per share, or EPS, is a ratio used to evaluate a company's performance relative to its competitors. On a scale from A+ to E, NIO has a D for SMR. The SMR rating considers revenue expansion, profit margins, and ROE all at once. NIO reported on June 9th that it has significantly reduced its net losses for the first quarter. Sales increased 24%, just missing estimates, as EV shipments were up 28.5%. However, analysts slashed their price targets for NIO stock after the company provided dismal EV delivery guidance for the current quarter. However, the EV manufacturer reported that production and delivery had improved from the beginning of June. NIO CEO William Bin Li noted in an earnings news release on June 9th that the company had seen strong demand despite supply chain volatility and vehicle delivery difficulties because of the recent reappearance of COVID-19. Experts predict NIO's losses would increase to 63 cents per share in 2022, which is more than double what they were expecting just a year ago. Forecasts indicate a 59% increase in annual sales. They expect NIO's losses to be drastically reduced to 23 cents per share by 2023, when the company's revenues expected to have increased by 72% due to the introduction of new electric vehicles and the diminishing of chip headwinds. Despite difficulties caused by the pandemic, NIO increased its EV sales in 2021. 33 out of the 35 analysts who cover NIO stock recommend buying it, while 2 recommend holding it. Reports from FactSet indicate there is now no one willing to sell. The electric vehicle industry in China is getting more competitive, and NIO aims to dominate the high-end segment of the electric SUV and automobile market in China. Automakers from both China and the United States are actively seeking to expand their presence there. In addition to Tesla, GM, Ford, and Volkswagen also sell luxury electric SUVs assembled in China to customers there. According to William Li, the CEO of NIO, EVs will account for 90% of China's new car sales by 2030. NIO plans to enter the EV market with 3 new models in 2022 despite fierce competition. In late March, it started sending out its first electric vehicle, the ET7. On June 15th, it released the ES7, a 5-seat electric SUV. This September, NIO will release the ET5, a more compact car. CEO of NIO, William Li, compares the ET7 to Model S of Tesla. He believes that NIO's customer base will expand with the release of the ET5, a more compact and less expensive alternative to Tesla's Model 3. Some have compared the ES7 to Tesla's Model Y. NIO now offers 3 different high-end all-electric SUVs, the ES8, ES6, and EC6. Despite NIO's focus on the Chinese market and its plans to increase capacity there, the company is also actively expanding internationally. It currently operates in Norway, where electric vehicles are sold, and plan to expand to 25 additional countries by 2025. As well, Li Auto, BYD, and XPeng have established a presence in Norway. The latter 2 companies are eyeing expansion into Europe. On the European continent, Chinese electric vehicle manufacturers constitute a serious threat to Tesla and other Western automakers. NIO, Li Auto, and XPeng, 3 Chinese competitors to Tesla, are growing rapidly at home. According to the International Energy Agency, global EV sales in 2021 more than doubled from the previous year, with China serving as the driving force. The IEA warned that battery supply chains and EV manufacturing capacity will have to expand at a rapid rate if the current sales boom is to continue through 2022. The lack of semiconductors is progressively improving, but NIO and its competitors face new battery shortages. And I think that's going to wrap up today's video. Hey, we hope you enjoyed it, and if you did, please make sure you give this video a thumbs up, smash that subscribe button, and press the bell icon too, so you never miss out on any of our updates. And if you have any questions or queries on your mind, you can always let us know in the comment box. And also make sure you check out our channel, where you'll find some more really cool stuff. Thanks for watching!